Hey everybody, I'm Tarl Yarber with Fixated Real Estate, and I'm here with my good friend Nikolai Ray, who you are up in Canada, right? Which part of Canada are you in?
Hey, buddy, I'm in Quebec City right now, actually.
Quebec, right? So you're coming out to the Pacific Northwest Big Badass Real Estate Wealth Expo coming up here in April 26th, 27th. And I just also wanted everybody to find out you were here last year at the expo. You're crushing it out there. You talk about commercial real estate and multifamily quite a bit. I want to find out, I want everybody to kind of know, like, why are you such a badass? Like, what's going on with you in the real estate realm? Like, what's your background with commercial and multifamily? What are you doing these days? Tell us about yourself.
Well, yeah. I was out last year at your event, and it was just awesome. We met at the Best Ever Real Estate Summit by Joe Fairless, and really hit it off. And I'm very happy to come and support your event. I think it's great. Why am I a badass in multifamily real estate? Just because I've had my hands so deep into it for
Uh,
quite a while now. I actually got into investing more as a leisure or just kind of for fun when I was actually a junior hockey player. So I
okay.
played junior hockey from the age of 16 to 20, and then actually played professional hockey for 2 years after that. So I was always very, very good at school. I did high school in only 4 years. I scored very, very high on my IQ tests. I always had crazy grades, even though I never went to school. So I was always very good at school and academics, and specifically mathematics, right? So I started kind of, doing some day trading, swing trading when I was 16, 17, with the help of one of my dad's friends who was a quant. And, I quickly found out that, I didn't want to spend my whole day in front of a computer screen. So eventually transitioned from the money that I made doing that to helping some of my friends who were starting to buy, small duplexes, triplexes, quadruplexes, by helping them with the down payment, because I obviously had made some quick, pretty easy money through the stock market. And that got me to start to learn how to kind of underwrite my own deals, because I was acting kind of as an LP or
uh,
a hard money lender kind of, right?
yep.
So this was, around the age of 18. So I did that for a couple of
Uh,
years. Then, my life brought me elsewhere. As I said, I played a little bit of professional hockey. I ended up studying biomechanics and nutrition at university, and became a three-time Olympic level strength coach and human performance coach. So went to the Olympics in Italy in '06, Vancouver in 2010, and Sochi in Russia in 2014, and actually built up a couple businesses in that domain, in exercise science and health and
wow.
sports. Yeah, so
I
that
didn't
was
know
kind
that
of my
about you. Yeah, I knew the hockey
yeah.
thing, but I didn't know you actually did coaching and lifted heavy objects and stuff too. I didn't know you did that.
Yeah, I was pretty, I was at an international level by the age of 25 with regards to expertise in sports performance and specifically biomechanics.
Wow.
So yeah, so it was pretty fun. I had a really huge defining moment when I was 25, where I kind of lost everything. I had a really bad partnership. I had this huge company. I didn't know how to run it, and I just kind of lost everything. And that kind of also killed my desire to keep and going in that area of expertise, because the second thing of it is also I need to always be able to keep on pushing and keep on going harder and harder and harder. And by the time I was 25, I was already playing kind of in that elite international level of exercise scientists. So it was a great segue to switching careers. Even though I'm saving you from the whole story, that'd be for another podcast or for another day. But it's also a very interesting story. But I ended up after that founding a real estate investment banking firm when I was 27, and within 3.5 years scaled that up from zero. I mean, zero, nothing. And obviously, I didn't even have any professional experience in multifamily real estate at that moment. But I knew that's what I wanted to do. I wanted to apply my mathematical skills and my entrepreneurial skills to investing. And I felt that real estate was very archaic, very archaic or even Jurassic with regards to how things are done. So I knew that I could come in and implement my vision and my specific talents into it. So I started a multifamily investment banking firm. 3.5 years, scaled that to $100 million a year in annual transactions. I ended up, working on about $1 billion worth of multifamily transactions, either through, financial engineering, underwriting, structuring the acquisition or the disposition or the refinancing of the assets. And so that's pretty much how I got into it. I sold that after 3.5 years, and then started the MREX, which is the Multifamily Real Estate Exchange, which is a real estate investment tech startup, so a fintech startup, where we're working at the intersection of big data, artificial intelligence, and blockchain in order to create a global unified platform for real estate investing.
Wow. Okay, so that's a lot, right? So you're how old are you now?
I'm going to be 35 this summer. I'm trying to have a bit of white hair in my beard, and I'm starting to get there.
That's a stress. No.
Yeah, probably.
Yeah. So
12 years of entrepreneurship will do that to you.
Oh yeah, I understand. Like I'm not as old as you, but I'm 34. So you're an old guy compared to me. I'm 34 years old. So, but for in reality, like that's fantastic. I mean, like in speaking of that, like so you talked about MREX, and we'll get there in a second, but you started working in the investment banking field and stuff like that, and started providing capital to multifamily and commercial buildings. If somebody's like out there in the commercial multifamily realm, not somebody getting into it, like not a new person, but somebody that's actually in it, what kind of advice can you give somebody that's in that realm right now when it comes to either leverage lending, analysis, or anything along those lines? Because you've got to have some pretty good experience in that, analyzing as many deals as you guys did.
Yeah, for sure. Quite honestly, I think you really need 3 pillars: knowledge, network, and experience. And it's very hard to get experience when you don't have knowledge and a network. It's very hard to build a network when you don't have knowledge and experience. So obviously, I think the first thing is, number one, make sure that your knowledge level is extremely high as possible. As we were talking earlier, multifamily real estate used to be a very mom and pop business in an investment field, and now it's getting a lot more sophisticated. It's only starting. It's going to get way more sophisticated. I specialize in financial engineering, and I build all these kind of derived products and weird financing structures, and we're just starting to even do this stuff right now. It's very new, so you have to really build your knowledge level up and get it as educated as possible, and then make sure that you build a network. Make sure you build a network of people. Make sure you take the time to know people. At every event that I go to, I don't focus on networking with 1,000 people. I focus on really trying to build a relationship with just a couple people. Like the event we met in Denver. I mean, I barely networked. I was there on a panel, and some people came to spoke to me because I have kind of a social media presence. But once I met you and Grace, right away I was like, okay, we really hit it off and tried to spend as much time as together. I think I saw Grace like 3 times during that event at 3 different days. So that's the second thing, because that network, you never know what it can bring to you, as long as you make sure that you bring something to it without expecting something in return. And that's why I was very happy to come out last year, and I'm very happy to come out this year, and fly out 6-7 hours and take a week out of my schedule to come and spend time with you. Because
and party.
And party, yeah. But that's the lifeline of real estate investing. It's a human business. It's not a quant business like the stock market, where you're kind of all just stuck behind computers. And the third thing is being in the action. Like you asked me how I'm such a badass, because I've just spent the last 7 years doing so much and just being so deep into the game, spending hours and hours of underwriting deals and structuring financial engineering products to acquire deals that I wouldn't be able to acquire, or that my clients would be able to acquire, and spending time walking streets and looking at properties and going into properties, looking at A-class, going to D-class properties in the ghetto, speaking to people, just spending all that time and investing into what it is that you want to build. So I think that's the number one thing and that takes patience and work effort, which a lot of people don't have. People all kind of want what's the quick win? Hey, Nick, how do I get to where you are? Well, do you have 12 years? Yeah. That's how you get there.
Yeah, and I do want to piggyback on what you just said about the networking component, because I think not enough people really harness the power of networking in this industry. And just the case in point I owe almost 80+% of my success to networking and meeting people like you and others out there. In any event I go to, I'm saying within your what you do, but I go around and I find okay, who's the people that I want to be friends with? And then I just go, and I kind of headhunt them a little bit. And I've done that with a lot of people over the years, and then we become best friends. And like, that's just what we do. But those relationships just build to so many levels, and and you don't really know where they're going to go sometimes. Like, it's, you have no clue. Like, there's a relationship I built a couple of years ago that, like, we've just been good friends, and he's a pillar in the real estate community, but like, we've never done business together, never done anything. We're just like, we hang out all the time. But like, out of nowhere, last week we had a business idea. We're like, this is a really good idea. We need to do this. But like, we had no idea anything would ever come out of it. So you don't know, right? And most people, when they network, they're trying to get something. They're trying to get something from the network.
Well, they have expectancies, right? You know, they're always expecting something, and that makes it very hard to be a good networker.
Yeah.
When you're networking and you're coming from a place of just, you know, enjoying the moment and kind of, you know, spiritually being in the present moment and not really focusing on that, and actually looking for people who you want, like you said, friends. I can't network with people that I don't feel like I could be friends with. Like, like, even if you were the greatest guy in the world and you had this network I want to tap into, and you know, you have something that I want, if I don't feel like we could actually just, you know, maybe chill for a weekend somewhere, you know, with our wives, or chill as buddies and, you know, have a couple of beers and then actually enjoy ourselves despite the whole business and real estate aspect of it, well, then I probably won't I won't develop that relationship, right? Yeah. Because how can you if you don't have expectancy? You know, if I have expectancy and the relationship is built off me expecting something in return, well, then I'll kind of go off of my own principles and try and network with you anyway. But if I don't have that, well, then I gotta have to enjoy myself with you and enjoy your presence, because we might not actually ever do business together.
Yeah, and you've been out there enough. You could smell it when people that are coming to you just because they want something from you. They're only there because they want to get something from you, and like, absolutely. Yeah, they're not. You can smell a long way. So those of you guys listening out there, if you're like coming up to like some of these speakers at the event because you want to get something from them, we can tell. So,
for sure, and it's annoying.
But like, you want to hang out, talk, right, build a relationship, and then like, you never know where it's going to go, right? And I'm sure you get hit up on social media too. Nikolai, tell me everything you know. Like teach me everything. Like. Yeah, and you're just like, really? Who the hell is this person? So,
like, seriously? That's like that's not the way to get to me.
No, not at all, right? So anyways, enough about that. Like, those good times. But so in reality though, like, there's so many ways that you can still network and have a mutual beneficial relationship. There's people that, you know, you've met, I've met specifically because that we do want to do a deal with them, where we do want to structure something with them. But
that's cool.
Like, go right at the throat and like go right at it. So
no, it's a bit like dating. You kind of, you know, you don't go right up to the girl in the bar the first minute and say, hey, you want to take off and go to my place. You know, you have to kind of.
You do that with enough of them, you know, it works eventually. But so no, but for now, that said, let's talk about let's. All right, so that's great. I like that, the 3 pillars that you need for real estate, especially in commercial real estate. And now when it comes to like one more nugget, maybe like when it comes to analyzing, let's say analyzing deal, because that's what you guys have done a ton of. I'm not really in the multifamily. Let's keep it simple with multifamily. I'm not really in the multifamily realm. I'm looking to, you know, get into it, that kind of stuff, but like upgrade up. We have, you know, duplexes and triplexes, but that's as big as we got. Everything else we have is single family. So if I wanted to, like, you know, I want to take my 4 greenhouses and upgrade to a red hotel or something like that. And I'm looking at, you know, different units, like what's one of the first things that you would recommend for somebody when they're analyzing a multifamily that they should kind of like look out for, what they should be, you know, digging into? I mean, for the most part.
Well, you know, it's a hard thing to answer because multifamily is not simple, unfortunately. I know a lot of gurus and people want to kind of make people think that it's pretty simple and it's easy to get into. It's a very complex asset class. I think the most important thing to understand when you start underwriting deals and analyzing deals is number one, you have to understand the market that you're in or that you're looking at, because multifamily real estate is not a macroeconomic asset class. It's very microeconomic. So it depends on which market you're in. You know, Seattle is very different than Dallas if you're investing in multifamily. If you're going to Tennessee, let's say, you're investing in Nashville. Nashville is very different than Knoxville, which is not that far away. So you have to really focus on the market that you're in, and you have to understand that market that you're in, and understand that there's kind of two facets to multifamily real estate. There's the financial facet of underwriting it and that whole investment kind of philosophy. But you have to understand that it's also a business, right? You're buying a small business. An apartment property that has 5 units or 25 or 250 units, you're buying a small business, and there are clients that live in the business. So you have to understand that it's not passive unless you're an LP, which I doubt a lot of the people who listen to this are. So it's an active entrepreneurial endeavor. So ultimately, when you're looking at underwriting deals, you have to consider that. You have to consider the market that you're in, and it all comes down to pretty much two variables: NOI and cap rates. And NOI and cap rates are intrinsically related. You can't have one without the other.
And NOI is net operating income.
Net operating income, which is, gross revenue minus vacancies and all that stuff. And then you take off all the normalized expenses, because one thing that a lot of people make the mistake of is they'll take off expenses that are maybe in the broker's listing, but they won't normalize those expenses. So to make sure that we want to have the proper NOI when we're analyzing cap rates, which is a percentage of it's a number we want to use to compare properties, you want to make sure that you're using a normalized NOI. So Fannie Mae, Freddie Mac, they publish normalizing standards. So like, even if you say in my market, property management costs 4%, well, normalization is probably going to be around 5% of gross revenue. You might say, yeah, but I'm going to manage my own property. It doesn't matter. Yeah, you have to put in 5% of property management, because we want to normalize NOI, because ultimately when you're analyzing a deal, you have to analyze it as if you're a banker, and it's possible that the investor might die, right? Or might end up quadriplegic or paraplegic, and then you as the bank have to take the ownership of that property and manage it. So you want to make sure that you're normalizing your NOI. So NOI and then cap rates, you want to use those two metrics. And that's really the two most important things, because those two metrics or ratios that work together and are intertwined allow you to then establish the three values that you want. Investment value or intrinsic value, whatever you want to call it, market value, and economic value. Now, economic value is ultimately the value that a banker will put on the property, okay? Usually in the US, the way you guys call it is you'll say, well, the maximum loan dollars amount for the multifamily property, they got maxed out because of debt service ratio or because of loan or LTV, loan to value ratio, right? Yep. So that's what I call economic value. In reality, there's a value that the banker put on that property. Let's say you're buying the property for $1 million. The banker, due to debt service ratio or loan to value ratio, might establish the economic value, which is a risk management model done by bankers, at $900,000. So maybe they said that they'll loan you a maximum of 75%, but it's 75% of the smallest value between economic value and the price paid. So in this case, you're not putting down $250,000. You're putting down 25% of 900 plus $100,000, which ends up being around 30%. So that's important to understand economic value, because that's what allows you to know how much money you have to put down or how much cash you need in order to buy a property. Now, market value is very important, which means how much is this property trading, or what's the cap rates in your market. So if you're in Seattle, maybe the cap rates are between 4.7% and 5.3%. Well, you have to know what the bottom is and what the top is, and then what's the average between there. Because if you're paying your property for 4.2% cap rate, you're way off, right? Yeah. So there better be one hell of a good reason why you're way off.
Yeah.
Otherwise, you're making a bad deal, right? So you kind of you have to know market value, and that also allows you to understand, well, if I'm paying 5.3% cap rate for this property, but I know that the most expensive properties are trading at 4.7%, well, then eventually you can calculate that opportunity that you could create an actual wealth and net value by increasing the value of your property through forced appreciation, which is very important. Yeah. And then I'd say the third thing is investment value. So what's the intrinsic value? Everyone knows about value investing through Warren Buffett and the stock market. Well, you can do value investing in multifamily real estate. It takes a lot of knowledge with regards to underwriting, market dynamics, financial engineering, but there's a way to use the true mathematical cap rate and not the market cap rate, the true mathematical cap rate to price intrinsic value of a property. So you might be buying a property at a 5.3 cap rate, but the intrinsic value might be 4.8. Or you might be buying a property at a 4.7 cap rate, and the market value is 4.7, but your NOI is lower than what market NOI should be. So there's an intrinsic value that's hidden in there. So sometimes you might actually pay too much for a property. You might actually buy a multifamily property and actually pay, you might say, well, that property is only worth $1 million right now, depending on NOI and cap rates. Yeah, it's only worth $1 million. But if I put it in $100,000 into it, it'll be worth 1.4. Yeah. So the real intrinsic value is 1.4. So you're willing to overpay for that property because you know that there's intrinsic value that no one's been, touching upon.
Yeah.
That becomes a lot more dangerous. So you have to make sure that, it comes back to, as I said earlier, your knowledge has to be really important.
Yeah, and you're doing the value adds and forced appreciations and all that stuff like that. Yeah, and like being able to figure that out, especially if you're analyzing, I live in Seattle, you live in Quebec and stuff, and like you're analyzing a deal in Nashville, like you say, like or whatever, then how do you analyze that as well?
Yeah, because there's the property level, and then there's the city level or the metro level area, right? Because it's pretty easy and straightforward. Within a couple of days, I can teach you how to analyze the property level potential with regards to NOI. But analyzing the market potential and risk with regards to market cap rates,
yeah,
that's a bit more advanced.
Fair enough. So that's good stuff. So like now you're also building a platform right now for on a tech side, right?
Yeah.
For multifamily commercial MREX. Can you explain that briefly? What's that all about? And when are you launching that thing? What's going on?
Well, so right now we actually built the prototype here in the province of Quebec, just because we don't really want that many people knowing what we're doing because it's such a big revolution in the real estate space. So it's kind of allowed us to have a kind of a protection or a barrier so that people don't really know what we're doing. So we built it here. We built a prototype. We're going to come out publicly. I'd say around Q3, Q4 at the end of this year. Yeah. And then people in the province of Quebec will be able to actually use the platform. Then we'll open up in the US at the end of 2020, so next year. And like I said, the objective there is to be the global platform for the multifamily real estate market. We want to develop and offer technological tools to real estate investors so that they can have a competitive advantage and prosper as much as possible in the market. So it's pretty cool stuff. If you look at the stock market, and I like coming back to the stock market because the stock market and finance is pretty advanced compared to real estate. Real estate is we're old. Yeah, we're still sending elements.
Yeah.
It's Jurassic. I mean, let's be honest.
Even just the escrow, I complain about escrow sometimes. I'm like, escrow is like, really? You can't accept an ACH transfer. You can't accept like all this, like wire or a check. Like at least that's in the US. Like,
yeah, I know. Really? It's awful, and just the offering process, of having to fill out an LOI and then sending the LOI, having it sent back, and then exchanging various documents, and then you're like, I mean, if you're buying a 250 unit property, usually. A lot of the documents are not even on the cloud or anything. So you end up with like 4 banker boxes of documents that you have to kind of sift through and do your underwriting based on that. So it's a pretty complicated process. There's no centralized marketplace either, which is kind of weird because if you look, let's say if I want to invest in tech stocks, right? What do I have to do? I go on the NASDAQ. Everything's there. I can see all the companies that are listed. I can also see the historic performance of each company, and I can make my own forecasts of how I think this company or that company or this stock will perform in the future. Mm-hmm. Now, with multifamily real estate, which is a $6 trillion business in the world, that's as big as the gold market, right? And it's getting bigger. It's huge. You can't even do that. You have to go on like 15 websites, Zillow and LoopNet and 10X Commercial and Crexy, and you have to go through all these different websites. Now, each website is structured differently with regards to UI and UX. So, maybe NOI might be at the bottom of the page on Zillow, but it'll be at the top of the page on LoopNet. Maybe on LoopNet you have the cap rate, but on Zillow you don't. So it becomes very complicated and time-consuming to just actually look at what inventory is if you want to buy a property.
No.
And then you have to realize that only about a third of properties are actually listed publicly. So that means there's another 2/3 of the properties. Where are they?
Yeah,
They're
in the commercial realm for sure. Absolutely. Almost all the deals happen off market.
Exactly. They're either passively sold because the seller didn't really want to sell, but for some various reasons, he or she ended up selling their property. Then you have the pocket listings, then you have the wholesalers. So it's a very complex marketplace because ultimately there is no marketplace, right? So that's one of the first things that we want to do is actually build out a unified marketplace and then give access to various tools that will allow you to make better decisions with regards to how you actually purchase properties. And then, I could go on for hours about what we're building, but that's it in a couple minutes.
Hey, fair enough. I like it. So we're looking forward to that. And of course we get to have first rights to be able to play on it, right?
Oh yeah, of course. Definitely.
Even though I live in Quebec and I can't speak French or anything, but
it'll be coming out in the US anyway next year. So no worries.
Is it all going to be in French or is it going to be in English?
No, in the US, it's all going to be in English.
Oh, okay. Just checking.
We're actually building it for the US market and for the global market because it's going to be used as a jump off platform for international investors who want to invest in the North American market. So
yeah, that makes sense. That's a huge capital raise right there if you want to go do that. So
for sure, definitely.
So it seems like you're actually kind of a smart guy. I was totally surprised by that. I didn't know that. So I was like, I thought you just no, I'm joking. But
don't be fooled by the amazing looks that I have and my ex-professional athlete body that I have.
That's right. Yeah, So, but for good stuff, man. So what are you going to be talking about? So PNW Real Estate Expo coming up. What are you going to be talking on stage about? I mean, what do you think you're going to dive into?
Well, I know I'll be doing I guess it's a private or a VIP workshop. The day before the Expo. And I'll be talking about applying portfolio management theory in multifamily real estate. So how to actually invest with a global macro portfolio management vision once you have more than one property, right? Because, buying that first or second or third property, it can be pretty straightforward. You don't have to have a PhD in finance. So the minute that you start having, more than 2 or 3 multifamily properties, there's some pretty cool stuff that you can be doing and that you should be doing. And you should not be buying properties at that point just by looking at the single property. It should be always in consideration of what the rest of the portfolio that you actually own at the moment. And that will allow you to make deals that you wouldn't be able to make deals that you could make better, and also to not make deals that you would have made that maybe you shouldn't make because your portfolio will be in bad shape if you do. So that'll be the workshop, and then on stage during the main event, I'm looking to talk about the keys to exponential wealth creation in multifamily real estate. And ultimately, I want to dive pretty deep into kind of what we talked about earlier, the how you can use not just NOI but also cap rates with regards to creating exponential value through velocity of money and time value of money to really step up your net value as much as possible instead of focusing just on cash flow, because multifamily investors and the whole investment community focuses a lot on short-term annual cash flow because and I get why, the whole Robert Kiyosaki books and a lot of people want to kind of leave their jobs and live off real estate, and that's really cool, that's awesome. But I'm focused on helping you build tens of millions of dollars of net value, not on building $60,000 a year of cash flow. So that's what I'm going to dive deep into.
Oh, that's awesome. I'm eager to have a lot of people there because people want to get into multifamily so much right now, and which is also kind of on a side note, a little scary how many people want to get into multifamily, but.
Well, it shows that we're probably in the later stages of the market, right? We're in the later stages of the cycle. And the good news is that the multifamily real estate market is a very, very big ship, and it doesn't have the peaks and the troughs that the stock market has. So even if you get in late cycle, it's not that dangerous of a thing. There is some danger of risk management to be put in place, but it's it's a good sign and it's a bad sign. Depends on where you are. Depends on how you do it.
Are you familiar with Ken McElroy?
I am, yeah, absolutely. Someone actually tagged me in tagged me in one of his posts. I guess he was looking for speakers for his podcast, and someone said, "Hey, you should have Nikolai Ray on your podcast." And then I kind of found out who he was after that. I didn't really know who he was. He really looks like an awesome guy.
Yeah, he's got 10,000 units and stuff, and that he manages. He actually runs all of Robert Kiyosaki's real estate too. So his personal like investments and everything. Anyways, we just found out he's coming out to our Expo.
Oh, really? Nice, awesome.
That guy's legit. And so, but now we have two legit guys, right? Nikolai Ray right? And Ken. So, but awesome, man. Like, I'm looking forward to having you out here in like a couple of weeks. So, PNW Real Estate. You guys can go to pnwrealestateexpo.com. Check out the dates. The ticket prices are always going up, right? So not going down. And Nikolai, where can people reach you?
You can reach me on MREX.co. So that's MREX for Multifamily Real Estate Exchange.co. Or you can also find me on LinkedIn and Facebook. I'm pretty active. I try to be.
Right. So fair enough. Me too. But well, thanks for everything. And we're going to see you here very soon, and we'll get some drinks together. Just like last time. I don't want to do another all-nighter after the party last time, like, because that messed me up the next day. So
that makes us feel too old after.
Yeah, I know. Like you're 35 now, man. Like, I mean, you can't.
I'm speaking in Miami the week after. I'm going right from Seattle to Miami, so I got to keep a little bit of energy.
Oh, you have to, especially in Miami. So, but all right, man. Well, I'll catch you there soon, and thanks for coming out.
Awesome.